It's a very interesting story. I think the issue with the stock is the time of year. This coming with 2 weeks left in the trading year. The XLV, which Johnson & Johnson is a huge component of, one of the best performing spaces within healthcare. The story is tough to actually have a great view, just given the lack of information we have. We have one story from Reuters, we have the company responding back, but without a lot of more information, it's tough to actually say what the impact will be. I know everyone's trying to figure out what the dollar damage could be to J&J. All I know is that we've heard issues before around baby powder. It's not new. I think investors are sort of used to it. So I think the move today is more of a reflection of stock positioning, crowding into large, liquid, defensive stocks. I mean, even if you were to tell me that the world was going to end, proverbially speaking, I think J&J would be a stock that investors would want to own. So I think that's really the biggest issue today.
So you have no way to quantify, Jared, how big of a liability risk they face from these lawsuits?
It's very difficult to tell. I know some analysts have taken the number of patients and they've multiplied them by what they think the average liability can be. We've seen numbers just today out of the Wall Street community of 5 billion up to potentially over 20 billion. It's very, very difficult to say. But all of that is under the amount
of market cap that this company is losing, which is well north of 30 billion at this point.
That's totally right. Again, the stock move, in my mind, much more of a reflection of the market dynamics, the fact that this stock had been an outperformer, XLV prices, or not XLV prices, but levels coming into today, and the trading dynamics and the nature of the market is why the stock is losing way more market cap than the potential damage. I know a lot of analysts out there do not think it's that big of an issue from a dollar standpoint.
Jared, clearly this move in J&J is weighing on the broader sector's performance today. Year to date, as you were alluding to earlier, the sector has been pretty strong. Do you think this big move based on year to date outperformance is justified? So a broader question really about the sector as to whether profit taking as we approach the end of the year is a reasonable thing to be doing.
Yeah, I mean, we put out a note last night on this exact fact pattern, and it's just ironic that we're seeing it a day later, just in terms of winners and losers, how investors are positioning into a new calendar year, noting that the large cap, defensive-like stocks have outperformed in healthcare all year. So I guess I'm not totally surprised. I mean, personally, I think the damage that's being done across the sector is too much, just given what we've learned today. But the fact that you have large cap pharma, med tech, tools, managed care that have all rallied year to date, it's not all that surprising given just when this news hit. Again, that to me is the biggest issue: timing and positioning, more so than the actual headline.